Okay, we're live now. Thanks,
Wow.
everybody, for waiting.
Big hey now.
6 minutes. We're kind of relaxed around here. I learned long ago that you can do streaming like really professional and intro and all that stuff, or you can just relax. Well, this is gonna be one of those relaxed ones for sure.
Chillax. Yeah.
Yeah.
Yeah, I'm with you.
Here with
I'm
Chrispyman
with you.
and Zen. You guys doing good? I know you're doing good because I already asked you.
Yeah, doing good. Thank you, Crispy, for coming on with us and having the conversation. I appreciate you doing this again. I think I've been on with you once before, and we've, obviously talked in the background a little bit, but I'm super excited to remind you or re-educate or, whatever you want to call it, just on some of the PTGC systems and what we've been doing for the last year. I think since last time we talked, we were probably under a year of PTGC being out, and now we're at like a year and 9 months. So we have a lot more data that we've been able to gather and compare and create educated guesses on the future. And kind of with the design of PTGC, I've made some hypotheses of where it would be at certain levels and stuff like that. So now we have way more data to see how close those hypotheses were and come closer to conclusions and see what a more successful pulse chain could bring to the PTGC system in the long term. So I'm super excited to just run through some of that data with you.
Yeah, this is gonna be fun. I think your recollection's about right. About timing. Uh, a lot of the work that you have done, I've been over the last months, right? I've been not. I wouldn't say I'm replicating, but I'm looking at the types of things that you set up, and some other people have done as well. And I've applied them to my token network, right? My little web. Including, and I'm reverse engineering and going backwards. So I'm really curious to hear more about what you have going on, what your observations are. And when I say back end, reverse engineering, from what I understand, Gray, right, when you did yours, you planned this out for 2 or 3 years before you even got started, right? I didn't do that. I ended up with a token that I pushed a button on to create, and then decided I needed to support it, and now I'm trying to build a structure around it. So I'm going kind of backwards, right?
Yeah, but at least you're doing something. Some
Oh yeah.
people do try to put out things, and then once they realize that it's a little bit more difficult than it sounds, and demand is a really hard thing to control and keep active on it on
Yeah,
assets.
that's the big
They
one.
give
Yeah.
up. So it's super cool to see that you don't give up and you're willing to do what it takes to try to drive demand in an industry that's really, really difficult to get demand because there's thousands of new tokens coming out every day. It's becoming easier and easier for average people to launch tokens and promise the idea of financial freedom in a very short amount of time, meme coins, which even makes it difficult for sustainable systems, long-term systems to get the attention of an already very small market. Crypto compared to finance in general is still a very small sector. We're
It
working
is.
our way to be larger, but it is interesting for very long-term projects how difficult it really is to keep demand on your side because the industry is so, hey, check out this new shiny object, check out this new shiny object to we'll get into all that stuff, but where I was getting at with it is super cool to see that you are trying to add things to your system to give it that utility and that demand that is very, very difficult to grab.
Yeah, 100%. Yeah, I'm hopefully I'm not lagging too badly.
You're not lagging at all, that I can tell.
All right, good. I pushed the button on the back end. Yeah. I think the translation, I'll give everybody that I'm thinking about. So I have this token, and I created an inspired, web of other tokens, right? That interact with that token and/or burn that token and/or burn LP. And yeah, that's exactly what it is. Trying to create native demand, like regular demand for it without marketing is very, very difficult. Like, it's very difficult for there to be a natural flow. But that is kind of where I'm focused, what I'm focused on, because what I'm looking for is an automate, to the extent possible, an automated system that continues to ratchet up pulse value over a very long period of time, And when I say that, I'm talking about multi-cycle, not this year, right? I mean, it'll continue, it goes up. I mean, we burn every day, but yeah, I mean, here's the thing, guys, anybody listening, you literally can watch some of these things if they're, if you don't have like a guy or a lady who wants to go push a button, sometimes it's hours, sometimes it's days before trades, between trades, it's just, now, of course, right now we're in a dead spot on Pulse Chain. I mean, I've never seen the volume this low. We had that great peak yesterday, but usually, the last few weeks, man, it's been just so slow.
There's been 2 points on Pulse Chain that have had this low of volume, right? It's right now, we're in it, all-time lows. And then also back in last summer, we're also in this exact same range. And Pulse Chain is actually or acting very similar, right? You can actually feel the same momentum on the chain of it having so little volume. Price of Pulse Chain is actually lower. It went to even lower levels, but the volume is still at that very, very low level. Last time Pulse Chain went at these low levels, we actually saw these automated systems like PTGC and UFO. It bogs down a little bit. The machine's still running, but it's running at a little bit slower rate, which naturally, that's a good sign of a bottom. That means users aren't buying and selling also, which means you're kind of at a floor. And you can feel that all across Pulse Chain, right? Not a lot of money is flowing in. Not a lot of money is flowing out. Besides yesterday, yesterday is kind of hypocritical, but in the grand scheme of things, it's pretty much dead. And it is interesting, right? Like, we've been here on Pulse Chain for over 2 years now. And technically, Pulse Chain as a whole has been a bucket with holes in the bottom, right?
Yeah,
Even though
a little bit, yeah.
every day, we're trying to onboard and we're sometimes bringing people in and we're pouring a cup of water in at the top. But for the last 2 years, the value flowing out of the bucket with these leaky holes out the bottom has actually been stronger over the trend for the last 2 years, which is very important to pay attention to, right? Because I do believe at some point these leaky holes at the bottom will get plugged up and will get filled. Either they're going to get filled by the sell pressure naturally just leaving, right? We have to wait them out and then they just get patched that way. Or they get patched by what I believe will most likely happen, some positive information coming out, either Richard kind of stepping in and giving some morality boost. Also, green candles can really help the situation, even though you still have the leaky holes. Instead of like every day you pouring 1 cup full of water into the top of the bucket, green candles is kind of like just shoving a hose into the top of the bucket. So even though you have those leaky holes at the bottom, you can still raise the level of this bucket very, very rapidly with good liquidity flow in. Just sadly, we're kind of just not having that right now with Pulse Chain.
Well, it'll come, and rather than my focusing on the like negative that there's low volume, I'm focused on this being an opportunity, right? So what do I mean? I can use your analogy maybe. These leaky buckets that I got, I'm patching them, man. I'm putting stuff in. I'm looking to see. See what kind of organic, volume I can get created through arb pairs, kind of Sonny the Detective style, right? And then what ends up happening is that gives me like a nice baseline. And then what I'm seeing when we see these surges is that things really speed up. They have an opportunity to speed up. It's kind of like making sure the wheels are tight on the car before I go speeding down the highway,
100%. Yeah, these mechanically driving demand, if you can get them functioning at these low levels, we've seen every time the market starts flowing in an upwards direction, those mechanical features increase as well. So if you can actually get them operating at these very unsustainable, like poor operable environments, when the environment becomes favorable to these systems, you really start to see them rev up, which is great for the value generation. But then that value generation becomes directly correlated with the price and liquidity, and you can really see them ramp up. And this kind of ties into, like, since the last time we talked, we hadn't had this much data with PTGC, but we've actually seen this happen with PTGC 2 times now. As soon as you see Pulse Chain have a net flow positive of value coming into it instead of a net negative flow, you can see the machine turn on, and you can really start to see the machine kick in and the value generation kick in, and then also the price appreciation of the assets due to the X multiplier, or as Richard calls it, reflexivity. And now we actually have very good data points to base that off of and learn off of, so we can actually prep for this next go, which I think you believe is going to happen sometime soon. I believe is going to happen sometime soon, and be better prepared.
Yeah, maybe 6 weeks or whatever. Well, you tell me if this is true about what I think is happening with PTGC, and the unique setup is, of course, you know, I covered this the other day. You guys have you know, very large pool of value between PTGC and UFO to what I would consider to be value, you know, the RH cores, etc. Right? So pretty huge. And then, so I guess maybe one way to look at this, in the way, sometimes how we describe it, is the way that setup is that when there's inefficiencies in the market, meaning when people are creating great slippage and lots of momentum because they're FOMOing or fudding themselves out, the pairs you've got set up with PTGC are in position to harvest that. To take kind of like you're supplying some of the LP to them so they can do their business. In exchange, you get paid, and the holders of the tokens are getting paid because of how the system's set up. I mean, that's kind of how I read it.
Yeah, it's pretty much exactly like that. We're offering a service to the chain by providing all this liquidity, and this service gets used by the market. And when the market uses this service, when there's imbalances between the tokens we're connected to due to users buying and selling, let's say, for an example, yesterday was a great example with Ink. Some wallet came in and bought, I think it was like $400,000 of Ink or something.
Yeah.
And that created a price increase of Ink. And since PTGC and UFO have liquidity with Ink, that increased the price of PTGC in that specific liquidity pair due to its bondedness with Ink, which then made PTGC overpriced in that specific pair. And now the arbitrage bots are like, oh, I have PTGC in, you know, let's just say PLS. Oh, PLS, that pair is only up 5% on the day. And then the PTGC in this Ink pair is up 35% on the day. We can generate revenue off of this. So then the market maker goes and it will fix that price between the biggest pair and the least biggest pair where there's most profit. And then when they do that, they obviously have to pay our system the fee. And then that fee gets to be used to increasing the value of the overall system.
Yep. Yeah. Exactly how I see it too. Because you know, so I'm sure there's more opinions than just two, but in general, people fall into two camps. You know, with the whole anything that's a fee-based system, and one is they're bad, they're going to fail because historically they've always failed, right? And the other is they're good, I like them. And so my position is a hard one in that I actually think that fee-based tokens provide the service, right? That's kind of my assessment, but I recognize there's other people that believe the opposite, right? And so, you know, exactly what you said. If I choose to put up LP with a tax token that I've created, that's my choice. That's my value. I put it up. You don't have to buy it. You don't have to sell it. You don't have to do anything with it. If the market needs that liquidity, it'll tap it, and it actually adds to the efficiency of the market by tapping that token.
Yeah, 100%. And they don't tap that liquidity until the value of that liquidity is worth tapping into, right?
Which goes back to your point before about volume of this stuff. If there's no need, then yeah, it dies off. If there's no demand, it dies off. Nobody's going to do anything with it. right? But if the system needs it, they're just going to use it.
Mm-hmm. Yeah, I think, fee on transaction tokens have definitely a bad rap just due to how they've performed on every other blockchain. But, here on Pulse Chain, I feel like we have a different wind of it because we found out a different way to utilize a tool that people recognized. But I think people get really caught up in the idea of fee on transaction token, but they have to realize that that's only one portion of the entire system. And you have to also pay attention to what are the other features that we added onto this to make it actually sustainable. Because I 100% agree, if you have this really well thought out structure, and you're kind of saying this earlier, like I spent 2 years working on the design of PTGC before PTGC even came out. That's 100% correct. But it was in the last few months that I actually figured out how to make it sustainable, how to give it that constant demand that I was looking for. And without that key feature, it runs into the same problem that every single asset on chain runs into, and that's a demand issue. It doesn't matter if it's a fee on transaction token or just a non-fee on transaction meme coin. If there isn't a reason for it to have demand, that demand eventually dies off and the token dies. Like one of the best examples, I think more recently, is Charles Hawkinson came out on stream and was talking about how he's going to start selling ADA into Bitcoin and stable coins and use that value to earn a passive yield. And then he's going to use that passive yield to buy and burn ADA. And what this is telling me is Charles right now is running into the same problem that all other tokens run into. It's a demand issue. He's recognizing that the amount of blockchains that are coming out that are better than his is making his reason to exist somewhat not, he doesn't really have a reason to exist anymore. But what he does have right now is value backing his assets.
That's true.
True.
That's the value. The value is how many people believed and put their value in. That's the value.
And he still has a lot of that value right now. So the best thing he could do, I think it's a great pivot, right? Is he's going to take some of that value out now and move that value into a system that does have demand that can pay him for doing so, and then use that as a value generational source to add demand to his product. And it's a great pivot. The cool thing about that pivot is that's what PTGC has been designed to do since its launch, since 2 years. We actually figured this out, it seems like, before a lot of the biggest systems that exist. Like a lot of the successful protocols in the top 100 that aren't meme tokens, and a lot of the meme tokens are VC backed and they're like artificially pushing the demand in to get it started, but they're full-blown companies, right? And the companies have a utility or service that they're offering the blockchain. But what's really interesting about the companies is there's tons of overhead to these companies. So actually very little amount of the value generation that these companies have go back to the token's price. They just kind of have a slapped on token to it just for users to buy and them to bring in more value. But what's super cool about like PTGC and UFO system is they're fully decentralized and automated. So 100% of the value generation actually gets to go back to the token's price instead of overhead costs. So where I believe will really start to shine is if we can get this asset to be knocking on the door of the top 50 and 100, we're going to have a huge edge against these other crypto companies because we're not actually a company. We're just a decentralized unit on chain with no overhead. And if you've ever been in business against a company with low overhead, it sucks because they pretty much outbid you over and over and over again. And I believe PTGC is going to turn into that because I think the value generation is going to be pretty much in par with these. And we can do some moon math and like play with what we think could happen as far as value generation in the future. And when you actually see 100% of that going to buy and burns LP ads or APY for holders and stakers, it becomes very, very difficult to compete against.
Yeah. Hey, let me throw this. I got a couple of things to say. Hey, Relax Finance. I have not given up on Hex. It's still #1. I'm doing stuff every day with it. But that's my That's my main play. And everything I'm doing that's outside of Hex is all about getting more Hex. So that's just so you have that. Hey, Greg, going back to what you were saying, and just to restate for people, because we're talking about, listen, we're builder type people, and Prairie's reporting on this stuff all the time, and people are watching, and so yeah, my assessments come back kind of like you, is except for some fringe cases, the use case of crypto, besides gambling and my speculation, is storage of value, right?
100%.
And how do you get the storage of value? Is people got to push the button to go in, right? So here's my breakdown. Just what you said is every token has the same problem. You got to bring eyeballs, and people got to believe to push the button and take that stuff off the market and exchange it for their value. Otherwise, all those tokens do, all of them down to the right. There's nowhere else for them to go if there's no demand, right? And it doesn't matter what people say, because even if you say no, mine's different, you lose just such a tiny bit of leakage in the system over time, just from the thing doing automated trading, right? You don't see it, doesn't look like it's big, but there's a little bit taken out. So eventually everything gravitates down, right? It just might take several years. If nobody sells, right? It just goes down. So I think all of the assets have that problem until you introduce utility, until you introduce fortifying types of relationships like you put in place, for these assets. I mean, I don't know what anybody's thinking. Yeah, I know we're all down on Pulse Chain and everything, but what do you think's going to happen to PTGC and UFO when we get 100x? What do you think's going to happen? You say, well, 100x isn't going to come. Okay, 10x. And then the next time 10x, 100x, 1000x. What do you think's going to happen? And so you guys are very well poised for that. So even before you get into your dynamics of how your asset does self-burning and adding LP and all that, I don't see how it can't not grow with us.
Yeah, that's kind of the goal, is to have a system set in place to where it can continue to grow even without human interaction and human demand. If you can create mechanically driven demand, you actually don't need the human interaction to keep it going up in price if the mechanics that you have in place are strong enough. If they're not strong enough, they are somewhat useless. This is one thing that I think was big last cycle that got changed this cycle. Is last cycle they did realize that they needed demand through utility, and they pushed this really, really hard, and everything had utility. But all of the utilities that people were strapping on didn't have a real use case or reason to exist. So what they were doing is they were advertising a utility that no one actually needed to use, right? They were saying, hey, we got a game. Hey, we got this bot. Hey, we got this. But there was already these games. There was already these bots that people could use for free. So there was no reason for people to pay to use their specific utility, in quotes, because there was no demand behind that utility. And they were spending all their efforts driving people to the utility. And when people would use the utility, only a small portion of that value that they generated would go to the token's price. And it was non-sustainable. So what I think they realized very quick is, hey, we're having to market people to the product anyways, and they don't even need this utility. They don't even need the token. We might as well just market them 100% to the asset. So at least 100% of the revenue can enter into the token's price instead of a portion. And that's where I think this huge shift from utility and DeFi went to meme tokens, because they realized that they were just having to force people into a lie anyways. And the lie was, hey, this utility really works, where none of the utilities had any reason to exist. You had to get a human to use the utility. Well, you're better off just getting a human to buy a meme token and promise them that they might be rich in the future. What's super cool about PTGC's utility and UFO's utility in this value generation system is the utility isn't based on human interaction, but it's based on the only guarantee that the markets give. And the only guarantee that the markets give is they move up and down, right? And that's obviously where we are right now in the market, is some days we're up, some days we're down. And it's nice to have a utility that isn't based on having to onboard humans, but just based on the market doing the only thing it's done for, hundreds of years now.
Yeah. Well, you guys also, I would say, so if I'm looking at, I'm just speaking out off the top of my head here about things that I see and what I think there's also community. I think community itself is a utility. You might not call it a utility, but it's certainly part of the value proposition. And you guys have a good community that you're working on, that people are participating in, so you have that. And then beyond that, there's also entertainment, right? There's also entertainment, which kind of might fit into the utility as well. People outside of crypto, we're in crypto, somebody might be like, I'm not going to spend $100 to DCA in a month, into something, but they sure as hell are going to pay their cell phone bill, or get their 2 subscriptions to Cinemax or whatever other system or whatever they're doing, or and spend that money on entertainment. And so there are people in our ecosystem that are really actively exploring, how do you combine entertainment with community with utility. But I do think we're going to hit that jump the shark point at some point, meaning we're going to hit a point where suddenly we're all going to go, aha, this is how crypto is going to be used and related to real life. And then things really will take off.
I think we can use it for a lot of ways. Right now, it's definitely just being used as a store of value, and that's the best product market fit for it to date, in my opinion.
Mhm.
I think crypto hasn't succeeded too well as being a good transactional currency, just because debit cards and fiat is actually not bad as a transactional currency. It actually works fairly well. But where fiat absolutely drops the ball is being store of value, right? It's literally like the worst store of value that exists. And even some of the traditional assets in the real world are very, very poor stores of value. If you look at like a diversified stock account that your bank offers you, and let's say they offer you 10% a year, well, right now inflation's at 10% a year. So even if you're holding that asset, you're technically making nothing, which who wants to save $1 if while they're saving it, their net worth is either decreasing, right? If it's in fiat, it's decreasing by 10%. And even with some of the traditional investments, you're absolutely breaking even, which incentivizes pretty much just spending your money. Or what I kind of did in the past before I got into crypto was I just reinvested the money in my business because I knew the business could generate a yield that was higher than inflation and I could make more money. But where I think crypto really offers a super good store of value situation, if you're in the right product, sadly, 99% of the products fail and go to pretty much zero, is you can store value in it if you're in the right process. And if you're in the right product as well, those products can give you yield. Those products can have specific designs like PTGC and UFO have tried to take some of the ideas that have made things valuable in the past, right? Like liquidity, scarcity, and demand, right? These are some of the things that have given stores of value in the past.
Yep.
With code, we're actually able to amplify these things. So with being able to amplify them, what we believe is we can create a better store of value by utilizing blockchain. And that's what I find super cool about blockchain is it's kind of like the app and internet world for goods and services, right? So how apps redefine taxis, it pretty much put taxis out of business and created Uber, and that was just with apps and internet. Well, I believe blockchain is going to be that for assets, right? I think it's going to redefine how assets exist with people.
Well, I think you're right about all that. And this is just the first. Well, I guess you wouldn't say it's the first inning, but we're in the first 3 innings of the game, right? If you want to compare it to baseball. And so payment rails are going to be in place eventually using blockchain or something really similar. And it's just we have to go through this choppy phase of store of value first before those rails can be fully put in. And how something like that occur, in my opinion, is eventually the right people have enough power with enough knowledge that they're like, hey, you Visas, you MasterCards out there who are charging all these stupid fees, most people don't even realize like vendors are paying anywhere from 1% to 3%, to do the processing for the credit cards. and all of a sudden there's a blockchain opportunity, and somebody's willing to take, you know, 0.1%, and it's all transparent, and it's all really fast, and you know, the technology's kept up. All of a sudden, that is how we're going to do transactions, and away will go these, you know, these processors will go away. It's kind of scary for them. But we can look back. It's kind of like you even mentioned it with with making banks outdated. I can give you 6 different technologies I've watched disappear. They now have come back as retro because they're fun to have as a, you know, as a collector's item. But there are whole businesses, both multi-billion-dollar businesses, that died on technology. And I think there's a whole bunch more that is going to happen just like that.
Yeah, I couldn't agree more. You can already see the banks, you know, putting their eyes on blockchain, so they're already planning for that.
Well, first, they, you know the old adage about fighting you and all that, but you know what eventually happens is somebody realizes it's in the middle of it. They're like, it's kind of like the Michael Saylor moment, huh? So for 10 years, you know, nobody was willing to take on Bitcoin. Now I can corner the market. So he did. So now he cornered the market. So now he's the big dog in Bitcoin. It's like that with a lot of businesses, right? People do that. So we're headed there. It might take another 4 or 5 years. Who knows? But in the meantime, it's a store of value. And yes, I'm in agreement that with UFO and PTGC, the setup is not only is it tied to value so that it should go up with value, but the scarcity and the demand helps ratchet it up.
Yeah, 100%. You know, by tying ourselves to things that we believe are great assets alone, like Hex, PulseX, PulseChain, we automatically get the growth of those assets over time, which I believe will do very, very well. I believe in all of Richard's products over the long term. And then we have our own specific mechanics to increase economics 101, supply and demand. If you constantly decrease demand or supply and increase demand, price is forced upwards. So it's an experiment in its own way, right? By studying the principles of how all these things grab value, I think we're hitting all the nails on the head. There are risks involved, of course. Like I'd say one of the biggest risks is just PulseChain at the moment has very little adoption. But what we've ran is with a somewhat successful PulseChain, with just a remotely successful PulseChain, PTGC and UFO can actually start knocking on the door of some of the largest cryptocurrencies in the world.
Yeah,
and
they
that's
should
just
be
with
able to leverage that. Yeah.
yeah, and that's just with a remotely successful pulse chain. Like for an example, right now between PTGC and UFO, we have roughly $10 million in liquidity. And if pulse chain does a 10x, which I think is what you would call like remotely successful from these levels, that would put our liquidity web at $100 million. And there's not a lot of DeFi protocols that have $100 million of on-chain liquidity, even if you go into the top 100 assets in the world.
Yep. Yeah. I'm with you on that. I mean, I look at that as well because I think that it's human nature to be biased when we have smaller numbers that don't mean a lot to us. And so not that $10 million is small. It's really not. But I mean, I would like to own those pools, right? I don't have those pools, but what I'm getting at is some of these plays that people have, like even when they're looking in their wallets, you know, and they're like, well, I got this thing and it's earning me $5 a week. Well, you know what? At 100x, it's 500 a week. How do you like that? Right. And so when you're focused, and I know you talk about this all the time, Eric, you know, people are so focused on it, it doesn't really matter. I'm not going to worry about the $5, right? Well, it does matter because later on, you might not be in a position to put the stuff in place. And you wouldn't have thought it out, maybe. You know, you can always play catch up. But if you're already thinking that way and you get a whole bunch of things in place, they're going to pay you the $1,000 a year, and all of a sudden you get 100x, it's 100,000 a year. Now that's life-changing money for people.
I couldn't agree more. I think the opportunity that we have here on PulseChain, not only to build these products, but also even get some of the products like PulseX and Hex and PulseChain at these discounted ranges is such a blessing because very, very quickly they can be out of this range. And now to get like those life-changing APY numbers. Like, we don't know what the future holds for these assets. Like, there possibly could be APY providing systems for PulseX in the future. There's already some for Hex, right? It's built into Hex already. These discounted ranges really helps average people get into them and get life-changing amounts of tokens once the assets appreciate over time. And they can appreciate over time through so many different avenues. They can appreciate over time just adoption of crypto. They can appreciate over time by the community working hard and onboarding, right? Like, I think a 10x is only $10 million injected into the chain. If you just cut off a lot of the like scams that have happened to the Pulse chain community and you got that value back in our hands, that we would be up like 20x from here if there is no sell pressure on it, right? And it's just crazy to think about how easy it is for this massive community to actually bring $10 million in. And 10x from here would cost you 10 times the amount of money to get the position that you might want. And I do think what we have right now is such a blessing, not only for builders, right? By, for us as PTGC and UFO to buy and burn our supply and onboard people into this asset at discounted rates, but also to bond ourselves more heavily with the Richard tickers that we believe will be very successful over time with a very large, strong community.
Yeah, can you speak to that a little bit self-serving for me, because I want to hear about it. But I mean, what is your tactic? I mean, this is for the audience as well. What are your tactics for continuing to build liquidity?
Right now, I've been more focused on buy and burns of the PTGC asset personally, because the PTGC asset has been coming very, very scarce and moving up away from us. And it's been moving up faster than the Richard tickers. So we've been trying to take advantage of the current discount that not only the market gave us, because in the last 6 months, money has pulled out of the crypto market, out of risk on assets, which when money leaves crypto in general, it not only comes from ETH, but then you have to also realize a portion of it comes from Pulse, right? Because everything's risk on assets. And then when money's leaving Pulse, it also leaves PTGC, which then creates a multiplier downwards on PTGC. So due to money leaving the market, it's actually given us a great opportunity to buy and burn our supply at these discounted rates. And after this discounted spot leaves, I most likely will circle back around and keep filling up the Richard tickers. But I think previously the main one I was focusing on was PulseX, just because I really like the supply and demand principles behind it. It's just got the reducing supply and it's got the constant demand. Even with no one wanting the asset, I know the market makers will just trade on PulseX forever, which makes me feel very comfortable about that position long term.
Yeah, I like that as well. Yeah, well, there's no surprise that the core tokens of Pulse Chain are the core tokens. So it's no surprise that the best things to be connected with are Pulse, PulseX, Inc., and Hex, to varying degrees, right? All have different types of risk, I guess, in terms of which one's going to go up the most. I don't know, but certainly Pulse has to be the number one liquidity. Yeah, not always. I mean, there's some edge cases, but yeah. So Pulse, PulseX, those are the ones, right? So I'm right there with you.
Really, Pulse is the least of my worry right now. The PTGC has the automated function in it that always with every transaction will add to the Pulse LP. But I think personally, Pulse will have the least amount of X's when money starts flowing into the market due to just how reflexivity works, right? So automatically the value flows through Pulse since it's the main entry exit point. And then any bit of that value that trickles down to PulseX or Hex or PTGC, right? Any of these sub assets built on top of Pulse Chain will be an X multiplier to whatever Pulse Chain is doing. And naturally, when money flows into markets, if you can look at any blockchain, so you could study what's happened in the past with other chains. When money flows to BNB, yeah, maybe a large portion of it's going to the gas token, but a very large portion of it's actually going to the sustainable alts built on top of that blockchain. Mm-hmm. And that value that flows to the gas and then to those alts is an X multiplier to whatever the gas token's already doing. So anything connected to the gas token is automatically going to get the X's that the gas token does. And if you have sustainability, longevity, and product market fit on that chain, you'll most likely get a trickle down effect of some of that value. And whatever dollar amount of trickle down effect you can get is going to be an X multiplier to that system. So personally, like you look at Pulse X and Hex, I think tons of the value that flows into Pulse Chain when this thing starts to go is going to land on Pulse X and Hex and not stay in Pulse Chain, because they have, in my opinion, better mechanics for price appreciation. Because the gas token of a blockchain isn't not necessarily specifically designed for price appreciation. They are good for price appreciation because they have supply and demand, and especially Pulse Chain in general, especially because it's deflationary now. But like Pulse X specifically has specific features that are designed to push the price up. PTGC has specific features to push the price up. So by moving your currency into a proxy of the gas token, but with specific code to make maximum price appreciation, you actually can sit there very comfortably. So my main focus isn't pairing with Pulse. We have a massive pairing with Pulse already. It's actually bolstering up the assets that I think will have a massive X multiplier.
Yeah, you're already on step 2 and 3.
Yeah.
Hey, speak to the Pulse being deflationary at this point, and how that is kind of counter, or not counter, but it's kind of connected to the idea that it's still being given out as reward.
Well, I think for at least the time being, it's been deflationary. So even with it being an inflationary asset due to gas tokens being inflationary due to validating, etc., it's currently deflationary due to the addition of pump.tires. And I don't know if it still is, because you have to have demand on pump.tires to keep that there. If pump.tires dies out, it would then come back in as inflationary. But it's had demand on pump.tires, which has made Pulse Chain deflationary. I don't know of a blockchain that is currently deflationary besides Pulse Chain. And if you have a gas token that's deflationary, over the long term, sustainability and price appreciation, I think is going to be massive for this ecosystem. Mathematically and mechanically, we already have a better formula set up for success than every other blockchain I know of that exists. But having little features like that where there is things built on chain that add to it, I think right now we don't see it. Like we don't see it on our chart right now because we're still kind of washing out a little bit of sell pressure and stuff like that. And the market's been going down. But when the market comes in our favor and sell pressure is out, I think we will see this drastically shown on the chart of PLS. Imagine all the inflation that's came to other assets that have done very well, that have had long-term sustainability, like ETH, right? Imagine all the sell pressure that's been on ETH from the foundation selling, and then also of the inflation of ETH as well. Imagine you were able to remove that. The price ETH would be at right now would be ridiculous compared to where it is.
Yeah.
And I think that's what Richard kind of leans on a lot of times when he says, like, what we have is a lot better than people realize. Like, we have the math of having price appreciation on our side with the products that we have more than anything I know of that exists on other chains. BNB buys back their token with what they earn from the centralized exchanges at random points. And if you look at that chart, it actually looks really, really good. So I think that's a pretty good visual of like what we could be doing over here, just with more features. And more importantly, like, I'd love to hear your take on this actually, with the hex inflation being cut by Richard staking, or whoever that OA, staking a large portion of those funds, dropping the inflation to the average person, I think is massive for the overall growth of hex. It taps it. I think personally, I think it was recognized that the inflation rate was currently bringing down the price of hex over the long term, because if the demand isn't higher than the inflation, price is going to force down. Inflation is fine as long as the demand is high enough. and then you don't really ever see the inflation coming in because your demand is constantly there. By him removing that larger inflation and shrinking it, and we still have that demand there, and what I believe is going to be high demand coming in the next wave, I think it's going to equal massive price appreciation for the Hex product for Hex, and I'm super beyond excited for it, to be honest.
Yeah, I concur that it's going to be big. A lot of times when people talk about this subject, they kind of depict it as, Richard made a mistake, blah, blah, blah. It should never been this high, blah, 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 right? I have kind of a little different view on it. My stakers out there, my miners, the guys and ladies have been doing it from the beginning, kept their stakes. They're doing fantastic, man. They're going to be rewarded so hot and heavy by what happens in the future that it literally is, life-changing, right?
Yeah, I don't even really look at it as any bit of a mistake, right? Like, I think the fact that inflation was able to come out in these last few years of, a downtrend has actually given the opportunity to the people that have been onboarded into Hex for the last 6 years a great opportunity to get a position that's actually worth it, right?
That's it. Yeah.
PTGC is a little bit different, right? And I'll even say this out loud. I actually think mathematically, PTGC will not give people this re-entry point that are coming in 4 years later, which isn't necessarily the best thing for massive amounts of people having somewhat similar amounts who actually believe in the protocol. So what I think Hex on purpose, I don't think Richard did this on accident. He had this inflation here so that the people who got in at this higher area, like, a lot of people did, actually have the opportunity to get a decent position in Hex who believe in it. And then this next time it goes, it might never come back to discounted rates because that inflation has actually been cut. So it's a crazy opportunity, not only for the people who were early, who were able to lock it in, but anyone who has been onboarded for the last 5 years, if they have spent the time to actually learn the protocol, they've been given an entry opportunity, and that's super sweet.
Yeah, it's 100% with you on that. And of course, I wasn't referring to you as being negative. I'm referring to as I talk to a lot of people. I'm doing these streams 2 or 3 times a week. Sometimes I'm doing at least once a week on Hex. I get the full brunt, on the whole Hex, right? Because I'm out here talking about it, meaning crap. I'm telling people that I just stake Quattro Cinco. It's not an insubstantial amount, and people are like, "What are you doing? Why you don't you see the chart?" And everything you just said and what I'm talking about, that's what I believe. I believe that this was the first third of the first cycle of Hex, and people who wanted to believe early got in. Those who could hold on held on and have stayed in. Those who have continued to build their position to built their position, and now we're at another, hey, do you believe or not point? And if you don't believe, it's fine. Get out, sell. In fact, I'm probably going to do a stream this week explaining to people how to emergency end stake and how to get out. I might probably take some flack about that too. But the point is, I think that it is now in a position where you got to either believe in crypto, Pulse Chain, Hex, or not. And if you're believing in all that, then one of the positions you can take is get yourself staked up with Hex with a ladder, because it's never been. I mean, it's been a little bit cheaper, but it's pretty cheap.
It's so cheap. It's around where I got in at when I got onboarded in. But the thing is, when I got onboarded in, I was still learning this stuff, right?
Mm-hmm.
Like, I wasn't so deep in DeFi and like all these things that I could take a real serious amount of money into it. Like, I was still in the learning process of the whole thing. And price started running. And next thing I know, within a good few months, price was at some levels that, to get 5 million Hex or 1 million Hex, it would have cost a crazy amount of change. So for people who kept learning and kept believing in the system and who wanted to learn and actually believed in the side of the code and not just, one person pumping their bags ultimately, they've actually been given the opportunity many years later, after they've been able to understand the protocol full term, to get the size position that they were actually hoping to get with a little bit more knowledge, right? And I think that's important.
Yep. Yeah, I'm with you on that. I just did a funny post yesterday, kind of like a story to post, where I said exactly that. Hey, you know what? I was ecstatic after big payday. I watched, which was back in 2020 in November, and I watched that price go up, and we went over $0.015, and I was excited, and of course that price did drop down to 0.007 by the end of January. And did I give up? No, I did not give up. Right. And so I stayed in, and then that thing went to 55 cents. Right. And so what's the moral of the story there? Right. So this is crypto. This is kind of like how this stuff works with all our assets. And we don't know it's going to be 55x. We don't know if it's going to be 10x. I mean, you can't really predict exactly what's going to happen with the market. But if you believe in that up into the right motion, these are the times where you're like, I'm not going to put money into something like that. I'm going to put value in there. But after the fact, you're like, why didn't I just get that extra $100, man, that extra whatever. Right. Because when you multiply by 50, all of a sudden you're like if I said to you, like, why didn't you get $1,000 worth in February of 2020? You'd be like, yeah, why didn't I do that? Or 21? Why didn't I do that? Because we're biased and we see it, and we haven't seen the prices go up the way we want them to, and so people won't necessarily take any of this information and go do something with it. They're going to wait until they see the green candles to confirm that things are the way we're talking about.
Yeah, and that's and who knows? Like I said, I don't know if the inflation will come back, but if inflation stays at this lower level due to supply and demand basics, prices won't have this massive retracement like it did this last cycle, right? It will be more sustainable due to how mathematically this stuff works. And that's what I think, this opportunity is I think that inflation was there to give the people who were onboarded through that hype cycle an actual opportunity to get a decent sized position. Because we know when price starts ratcheting up 50x, it's very hard to get a decent sized position. Look at how much Hex is in liquidity right now. There is not a lot.
Yeah, I'm with you. I'm watching it. It's doesn't take much. We're pretty thin in terms of what's being offered up for sale. But it's a long game, right? I mean, it's just going to be, we're going to have this cycle, however it pans out. And then we got another 4-year, 5-year cycle, whatever it ends up being, and we'll move into the future. But I 100% agree with you. And I think a lot of these same dynamics apply with what you guys have created with PTGC and UFO.
Yeah,
if not just related.
That's what I kind of mean is I think because PTGC is hyper deflationary, if we get this move up on Pulse Chain and the bull market comes, and then obviously a bear market will come and everything will retrace back. I actually believe mathematically PTGC won't hit the numbers that some people hope. I think with its deflationary tokenomics, with the DAO having value on the sideline, etc., I actually don't think that it will go as low as people believe. And the thing that I can actually relate that off of is I think when Pulse Chain goes this cycle, I don't think it's coming back to these levels next bear. I think it will land at a higher floor, just like ETH always landed at a higher floor, just like Hex landed at a higher floor, just like Bitcoin landed at a higher floor, and which that will help PTGC land at a higher floor. We've actually seen in the last 2 years, PLS hit lower floors every microcycle it went through. So it went down, and then it would go up, and then this was the market just exhaling and inhaling, just what it does. It does these microcycles through the 4-year cycle, and then when Pulse Chain came back down, it actually kept hitting lower lows. So even with Pulse Chain hitting lower lows, PTGC hit higher high, higher high, higher high. So if Pulse Chain goes and hits high and doesn't go to a lower low, mechanically, PTGC is already hitting higher highs with the blockchain hitting lower lows. If the blockchain starts hitting higher highs, I would think that will help the PTGC system actually sustain its growth even more. And actually, more than ever, the token supply is better distributed every single day, right? it's buying and burning the asset, and mechanically that creates more sustainability.
We have a slide that's kind of demonstrates what you're talking about there, Zen. So Crispy, this is some information. We have an experimental wallet that we get some of this information from. And then from last August to just this past April, Pulse Chain's volume increased by a 3x, but its price decreased by 38%. I'm not being bearish on Pulse Chain. We love Pulse Chain, obviously, around here. But then in that same time frame, PTGC's volume increased by 8x, and its price increased by 533%, which is very, very bullish for the Grays currencies.
Mm-hmm. Yeah, very much. I've been watching that chart.
Yeah. Did you want to comment on that, Zen?
Yeah, I can. So obviously that's what I was just saying is Pulse Chain's price has been hitting lower lows. The volume just recently has hit a all-time low, so it didn't go lower with price, which is awesome to see. We can actually see PTGC's price hitting higher highs, even though Pulse Chain has been hitting lower lows. PTGC's price has been hitting higher floors every time it does this market cycle. We can also see the volume increasing, even though the volume of Pulse Chain has retapped the exact same level. PTGC's volume is constantly growing. This is due to multiple things, right? It's due to PTGC's price growing, so the human interaction and the token price is higher, which makes the liquidity pools higher. The liquidity web is also growing with these market cycles. So every time the assets go up and then the assets go down, we're adding to our liquidity, which then makes it to where market makers now need to move more money, which then makes it to where we can actually mechanically drive more volume, which then helps us mechanically drive more value, etc. But again, I do think on this next push up, Pulse Chain will not be heading to lower lows. I do believe at some point, Pulse Chain will start lockstepping up into the right, making higher highs over the long-term cycles. And this will help PTGC make higher highs in price and also make higher highs in volume. And making higher highs in volume is really important to the system, because if we can keep increasing the volume, that helps us keep increasing the APY in dollar value. That helps us increase the buy and burns in dollar value, and also increase the LP ads in dollar value as well.
Mm-hmm. Mm-hmm. Yeah.
Zen, do you want to answer this question from Arjun? If RH coins go down, PTGC gets more buying power, which is good for price. But if RH coins pump hard, what happens?
Yeah, so obviously we want Richard's tokens to pump. We are an index of the blue chip. This is one of the things I think it drives a lot of value to PTGC and UFO is in the financial market indexes. Like indexes of stocks hold a very, very large share of the financial market. So naturally indexes on chain are going to hold a very, very large sector of the market as well. PTGC is one of the biggest indexes of Pulse Chain, and it has obviously buy and burns in APY built into the code, which gives it good product market fit in that category. So if PTGC is an index of the RH tickers and the RH tickers haven't been performing well, that means that index hasn't been performing well. The thing that's been making PTGC perform well to date is the asset itself. But what we believe is going to happen in the future is sooner or later, the index, all of the things that we're connected to are going to start to go up, and that's going to make PTGC's price increase. It's going to make its utility increase. It's going to make its liquidity increase, and it's going to make its volume increase, which will actually make the overall product a better product. And right now, what PLS is actually offering users in PTGC is an extreme discount, right? If Pulse Chain wasn't down here at these levels, let's say it was 10x from here where some people maybe hope Pulse Chain was at, then that would actually mechanically mean PTGC's price would be 10x higher, making it to where to get a position of the size right now, that portion of the supply would cost you 10 times more. So I think what Pulse Chain is giving is a great opportunity, not to only to Richard's tickers, but also to great assets on chain as well.
Yeah. 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 Even for us founders, I mean, I've been taking tokens off the market, buying them off, longer
Yeah,
the
it's
price is low.
making our assets low too, because we're buying and burning, you're buying and burning. It's opportunity for the people willing to grind to DCA. People who still work their jobs. I still own my company, and I plan on owning my company even if crypto is successful. It just gives us a longer opportunity. I had predictions of how I thought PTGC would grow and how Pulse Chain would grow. PTGC has checked all the boxes as my hypothetical situations and actually outperformed them. Sadly, Pulse Chain hasn't, but that's okay, because what that actually has created for me is the opportunity to bond with Richard's tickers, create bigger liquidity pools than I ever thought I could have gotten at this time, because I thought price was going to run away from me. But since it didn't run away from us, we're able to keep DCAing, and building up those liquidity webs to make them at the size that they are now.
Yep. Yep. Yeah. Yeah. I see that. I'm watching some of the macro charts, and I follow something called the golden ratio multiplier. And just kind of looking at mostly on yearly time frames, so cycle time frames. And this week we got another buy on Pulse showing, hey, we think it's going to go up. And then for PTGC, there was a reversal candle that came, not a candle, but an indicator that came in and say, hey, expect to see PTGC go up. So just kind of anecdotal, with those types of signals coming in, just looking at what's happening with the demand, what the price action has been. I think it's going to go right along with what everything happens in the ecosystem and outperform. Well, like you, I've been a little disappointed to this point, but different time frames too.
Yeah, it's for me, like if money starts flowing to risk on assets, which I believe we're running into that period right now, as soon as that's happened on Pulse Chain the last two times, right? That's pretty much the last two highs that we had. One of them was a year ago, or a year and a few months ago, around March. We hit a high, and then the other one was in around January, and that's when money was flowing into the markets. Every single time we were at lows and money started flowing into the markets, PTGC did crazy amounts of X's. And actually what I'm seeing on chain right now is that exact event occurring again. Is we're hitting these lows, volume is at all-time lows, money should start to flow back in the markets, in the Pulse Chain. The first time Pulse Chain went up 5x, PTGC went up 45x. The second time this happened, Pulse Chain went up 3x, PTGC went up like 50x. And this is just basic market dynamics. When money starts flowing into risk on assets, it makes its way down, downstream. So it's going to flow into ETH. A portion of that's going to flow into Pulse Chain. And if a portion of that flows down into PTGC, that's an X multiplier over the growth of the chain. That's no guarantee though, right? It can happen in the opposite direction. So that's like the caveat. If when money's flowing into the chain, if people don't see value in holding your asset and they actually sell into that, that's usually an unsustainable asset that people just want out of, you'll have an X divider, right? And most people don't even know the X multiplier exists in this fashion, because most assets that exist on chain are sinking ships. People that are holding them actually want out of those assets. They're just waiting for price to go up. And when price goes up, they rotate back into the gas token or off chain in general. And that's why you don't actually see this X multiplier show, even though it is showing. And the sad part is they're actually not getting any more value, because ratio wise, it's the exact same thing. It just felt like a higher value to them because there was a higher dollar amount next to it. But really, they were getting the same amount of Pulse Chain for the same asset. So they could have just rotated at the bottom. It didn't matter.
Yeah.
Do you want to segue over to the special tool, guys? You give that a try.
Yeah, we can do that. And then after that, I'll probably leave you guys. But let me take off my camera. I assume you meant my tool.
Yes.
Or not me. Special tool. All right. We'll see how this will look when we pull it up on the screen. You tell me if my audio lags or whatever. I'm sharing it out to you guys.
Crispy's doing some high bandwidth stuff right now. That's why he's got his camera off. what he's doing is gonna take a lot of resources. Be sure to follow Crispy on Twitter. Follow him on Twitter and subscribe to him on YouTube.
Let's see if you can add this to the screen.
Oh yeah.
So this is our little tool that I'd put together to kind of dig deeper into liquidity. It may not have all pools represented, right? Because I'm not going after necessarily anything that doesn't show up on deck screener. So if I don't see, if you don't see fucks in here or some other new thing, that's why. But this is one that I like to watch a lot because this is my my top tokens liquidity web greater than $1 million in liquidity, and it's a very small list. And but of course, we got the Atropas out there, but PTGC right up there with the big guys, with the UFO,
Yeah,
So
I think in the past I saw you were able to toggle off everything that wasn't like Richard's tickers or bridged in assets. Was I correct there?
yeah, let's go ahead and do that. Yeah. Well, I actually have another one that I do that's all value related as well. But they, they'll pop up as the largest one. So let's go. So I'm looking at top tokens, and I just wanted to relate to everybody that, I consider, both PTGC and UFO to be one of the top, the two top tokens or part of the top 10 tokens that are out there. And so then I'm going to switch over to look specifically at PTGC first. And this may take a moment to load up because there's a lot of stuff. But what I'll do is I have pair liquidity. Pairs, that are up here. And make this a little bit bigger and drag it around. But visually, people can begin to see, just how big this is, right?
Crispy, your audio is lagging quite a bit.
And just how much liquidity. I may have shut myself down. You guys hear me okay?
We hear you good now. Yeah, we missed some of it though.
Yeah, I'll stop messing around with the screen. Yeah, visually it's fun to do this. Usually it's better if I'm just sharing out like a screen print or something, or if somebody's on there themselves using it, they can do it. But all I'm really trying to show is just the complexity of the web that's out there with PTGC, UFO, and just the sizing of the positions, etc.
Is there some way you can give us a comparison to another token?
Yeah, in which way? What kind of comparison?
I mean, in liquidity web, would there be any value in?
Yeah, I think we can hit that in a different direction. That visually we don't have to show it.
Crispy, what I was kind of talking about on that last page that you had, some of the assets that are popping up, that were showing all the assets that were above 1 million.
Yep.
I've seen in the past you were able to only show the ones that in that million that you're counting is right now it's taking into consideration some assets that are LP'd with non-value backed assets. So I consider those like sometimes liquidity dead ends. So like for an example, I can create a token, I can mint a token, let's say I have someone who had $1 million of PTGC and I paired those two together. Well, yeah, that pool would technically be worth $2 million, but that doesn't mean PTGC could exit into that pair because that pair has no value connected to it. So I think even when you like take that into consideration, the list is even a lot smaller.
Yeah, yeah, and not casting shade on anybody's tokens out there, because a lot of tokens obviously are paired together. But they open up windows of value, right?
Yeah, and they can arb and generate
Between the
revenue
two
off of them.
tokens. Let's see what's on there.
Yeah,
Yeah, so
I didn't mean it in a
let's
negative way.
do.
You can generate revenue off of that stuff
Yeah,
too.
yeah,
I was
yeah.
more just,
I wasn't taking it.
okay.
Yeah, I wasn't taking it that way. I was just saying for all the viewers that are out there, so they know. So if I come in here, this is a little bit different view, and this one I worked on what we called the value web, right, to show how something's connected to value. And so, assuming I'm not getting jammed up and you guys can hear me.
I can hear you.
All right.
So far.
All right. So you can see this web looks a little bit different in that, yeah, you got the we're considering PulseX in this case, and Pulse will also be part of the web. But you can see the 630K with PulseX, the 1.24 million, and that's not always the case, right? With a lot of these other tokens, there's Hex out here with 400. As I was saying, the Hex out there with 436K. So in any case, I give the point that we're trying to get to is that, hey, there are different types of tokens, right? And they have different types of value to out to value, I guess. Now, what token would you want to compare it to?
So it wasn't really the comparison. I was more saying like that web of all the assets that were over $1 million. If you only include the like real passive value or whatever you called it, that list actually becomes even less. And I was more just bringing up that one of the things I find very cool about PTGC and UFO is a lot of the liquidity that's backing it is real passive value, which is important, right? There's value behind the assets that we've spent a lot of time pairing with.
Yeah, 100%. And when I'm doing comparisons and I'm looking at different tokens and I'm looking at the values. Okay, high level, what's the overall liquidity? Okay, like look at that. But then when I'm digging into it, I might also be looking at volume. So what's the volume on these things? And then I'm going a little bit further. I want to see what the speed is. What's the ratio of liquidity to or volume to liquidity? Those types of things. But yeah. And then, so the number one sorts I do is show me all the pulse, show me how much pulse each one has, and it begins to tell a tale pretty quick, how much pulse X, how much hex is tied, that type of thing.
Yeah. Super cool tool.
Yeah. I'm sorry. It's not really great for display. This type of technology is actually one of the sticker guys working on something like this to get out for free for everybody. Unfortunately for me, this is some sort of patented software to handle the load and how they do it. So it actually charged me per license. But it is pretty cool though, because we've been able to use this to kind of dig in, and I won't do it on screen right now. It's best if I did like a video, but you can actually drill down to these things and show a complete explosion and just see how everything's interrelated, that type of thing. So
super sweet.
Yeah. I guess that probably hit the mark what you were going for.
Oh yeah, it definitely did. It's, I think it does show that, we are working very, very, I wanted to showcase, PTGC and UFO that we're working really hard to build up a very value-backed liquidity web for the protocol. And I think that really showcases it. So that's what I was asking you to pull it up. So thank you.
Oh yeah. Yeah. I'll keep talking about it too, as far as those numbers come out. I'm branching out a little bit further than just talking about hex at this point, for a variety of reasons. Not negative, just kind of positive, is that I'm not just going to be doing streams on that. So I've been branching out into things that I do, the strategies and whatnot, because I focus in on a lot of stuff. I mean, I like hex. I mean, I'm focused on hex, and staking a hex, but there's things I could do with hex, like actuator, and then there's other tools that are rolling out that I'm involved in, and and then everybody in my group, right? They want to know how to get in, they want to know how to get out. So, how do you actually educate on those processes? So, yeah. Anyways, my point is that don't be surprised if I pop up with some UFO stuff, alien stuff. I guess not alien, but PTGC.
Yeah, I love that. I love the sound of that. We can use more. Well, we have lots of analytics, but we can always use more. Have you looked at the site lookintoptgc.com? Are you familiar with that?
Yeah, I've been there before. You want to show us? I got
Sure.
about 10 more. I got about 10 more minutes.
Okay. Maybe we can actually do a scenario if you wanted to. Like if we talked about the X multiplier, if you had an idea what you think Pulse Chain could do for X's, that we could see what perhaps PTGC could do. But you're familiar with the site. We got the dashboard. There's a paywall on this site. If anybody wanted access to it, you get a subscription for $19.99 a month. You put in my coupon code PB15, and that'll get you access to everything. But the dashboard is cool. You can see how many tokens have been burned. You can see the distribution of the fee. And if I'm going too fast or saying too much, then just interrupt me. But we're 38 X's from a penny, PTGC is. And then if you scroll down, you can see the fee allocation. So there's a 5% community fee on every transaction. And you can see how much has been allocated for every, in certain time frames. And then where does it go? It burns PTGC, it's added to the liquidity, it's sent to the DAO, holders, stakers, and then the same thing for UFO. Tokens burned, and then all the fee allocations and all that. Crispy, did you want to do a quick scenario of moon math to see where these tokens could go?
Yeah. I want to see 28x.
A 28x on Pulse Chain, right?
Correct.
How many X's do you think PTGC could do against Pulse Chain in that time?
I think how about 2x?
Were you going to say something, Zen?
Yeah, I was just going to say, just for information, right now PTGC since August 26th is up 10x against Pulse Chain. If that helps you at all, pick whatever number X you want to do over it.
Yeah, two's conservative, right?
Very conservative. Okay, I like it. I like conservative. You and I are in the same age bracket, the conservative age bracket. Okay, so that would be, spoiler alert, that's 2 times 28. So 56x, 56 times the current price, which would make it, am I missing a field? I sure am. Oh, I got to select, there we go, 2 and then 28x. Calculate. So if PTGC moves up against Pulse at a 2x and Pulse does a 28x, the final price on PTGC would be 1.4 cents. 1.4 cents for 56x.
I'd take that.
You might take that?
I'd buy that for $1.
Yeah. So, yeah. And I'm glad you're familiar with this site because, any work that you do, you can reference this and then you're not doing multiple work, right? Duplicating stuff for nothing.
Yeah. I don't do a whole lot. With at least tool wise with moon math. I do moon math in my head sometimes, and sure. I would use this website for that too.
Yep.
Yeah, one thing I like to think about is, so since PTGCs came out, all of its X's has not been from the things it's bonded to, like Pulse Chain going up, it's from it going up, right? And when an asset goes up against the blockchain for its X's, the asset spreads itself from its liquidity. So I think how it works, and I don't know the exact numbers, but I think the liquidity moves up at a 40% ratio. I've done the numbers in the past, and I don't know if I was completely right on them.
Mhm.
But for an
That's
example,
pretty good.
that's pretty close. So if we moved up 10x against Pulse Chain, our liquidity would have only went up 4x, right? So you start to actually spread yourself from price to liquidity, which naturally eventually will start to push the price back down because you get people up so many X's and there's not as much liquidity to back those X's. So then price goes back down, but then you get closer to that good number again, and then you can usually work back up. But what's super cool when the blockchain starts working with you is when you get X's from the blockchain going up, your liquidity X's go up evenly. So if your asset goes up 10x because Pulse Chain went up 10x, your liquidity will now go up 10x as well, which makes the growth so much more sustainable, right? So I'm beyond excited for that event to take place, not just because of price appreciation, but price appreciation of the liquidity as well, because that makes the growth of X's a lot more sustainable in the future. And then for our system, the more liquidity that we have, we obviously generate more revenue for that growth as well too. So if price keeps running from liquidity, what naturally starts to happen is APY will start to drop because we don't have as much liquidity working for that token price. But if the assets that we're connected to go up with us, the liquidity will rise at a somewhat more even rate, which will make the APY rise with the price evenly, and then the buy and burns, et cetera. What it equals is just a more sustainable growth method. And we've yet to gotten to see that in full effect, right? We've gotten to see it in little bits, like Pulse Chain doing a 5x and a 3x. But what I would be excited to see is how the machine operates at like a 10x of Pulse Chain or a 15x of Pulse Chain, because what we've actually found is a lot of the calculations that I've done, I multiply the X's of the blockchain, creating even amounts of liquidity and volume, because since the majority of our volume does come from our mechanical setup, the liquidity web, not much from human interaction, depending on the day, we can actually make predictions of what the volume can be in the future based on our liquidity increasing and market makers needing to move more value. And then we can actually make educated guesses on how much value we could rake in at that point, right? And if Pulse Chain was to, let's say, do a 20x from here, well, our liquidity would be up 20x, or most likely more if we've outperformed Pulse Chain. But let's just say it's at even, we have no net buys or sells. Well, if our liquidity is up 20x, that turns between PTGC and UFO, a $10 million liquidity web into a $200 million liquidity web. And now the market makers will need to move 20 times the amount of value, which, today, let's say we have $100,000 of volume. Well, that means in this event, we would be at $2 million in volume. And if we have $2 million of volume a day, the system would be producing around $50 million a year in revenue going back.
That's pretty awesome, man. Yeah, it's because of sheer growth of how everything can scale up. I got kind of a trailer park version of that where you talk about I have these other tax tokens. Let's say I had a tax token and it was pointed at PTGC, right? But the value of that tax token web is not even, let's just say it's not even connected to PTGC, right? If the value of that tax token web for some reason goes up 100,000x, it becomes so big, it can outsize the target. And all of a sudden, its little tiny itty bitty moves back and forth are swinging, whatever it is it's pointed at. So there's those types of things and dynamics. I can appreciate all your math, man, because it hurts my head sometimes trying to figure out how this stuff actually works. I mean, on paper, it's easy to say a whole bunch of stuff for me to say, but actually seeing it, putting stuff in place and seeing it actually work, I can see what you're getting at.
Yeah, I'm very I like to break things down to try to figure out the solution, because I feel like a lot of people come into crypto and they're looking for a solution of financial freedom, right? It's, they're looking
Yeah.
for an asset. That's why most of us are here, is to become financially free, to hopefully enjoy whatever time we have left with our families and friends. That's why I'm here.
Freedom.
Yeah.
That's it.
And we can actually break down this stuff to math and mechanics to make the probability for our outcome greater. And that's how I like to look out at PTGC and UFO, and why I obsess with all these numbers. Because if I can actually mathematically and mechanically break this stuff down, I don't only know how to get to the end result, like I know how to get to the end destination. If you hop in your car and you don't know how to get to the end destination, you're most likely not going to get there, right?
Yeah.
And a lot of people don't actually tackle cryptocurrency in this way. They hear people just say like, "Oh, this asset could do 100x," and this person saying that actually mechanically doesn't even know how to get there. They don't know how much value it's going to take. They don't know what kind of assets they should be pairing with, and they don't have the math behind it. So that's why I'm very passionate about breaking down and expanding all these numbers into the future based on different scenarios. Because if I can create every single scenario that I can see existing, and then have a resolution to every single scenario, I can actually adapt to any direction Pulse Chain goes. I have a plan if Pulse Chain literally does nothing. I have a plan if Pulse Chain goes down. I have a plan if Pulse Chain does 10x. I have a plan if Pulse Chain does 50x. And not a plan for me, like literally a plan for the growth of the PTGC and UFO ecosystem. And we can actually break all this stuff down so easily with mechanics and math, and just magnify it out, because that's all this stuff is just a massive Excel spreadsheet, and you can manipulate the numbers to change your end result. And if you know what the end result is, you can actually make better predictions for the game plan to get there.
100%. Plus, man, you've been trailblazing for a long time, and I know a lot of us picked up on what you have done, and it's been a great education.
Yeah, I appreciate that from someone like you, Crispy. You have no idea.
No, you got it, man. I never thought I was going to be doing LP, man. Never had any plan at all to do any of this crap, but here I am. Goddamn you, Richard Hart. You had to go make something else. If he had just kept it with Hex, I just would have been in Hex, man. That was it. But anyways, hey, I'm happy for the journey.
Yeah, we are. We're happy for the journey too. Tails Dream says, adapt, overcome. Circumstances don't matter, only what we do with the circumstances.
Yeah.
Well said, Tails Dreams. Well, is that a wrap, guys? Or you got any?
It has to be for me, my friend. I'm sorry. I gotta.
All right, good. We're at 90 minutes anyhow.
Yeah, I don't know. I thought you were like, we're going to talk for 5 minutes. I don't know.
That's all I talk.
That's what Banana does to get them on. We just say, hey, it's a 5-minute little conversation.
Yeah. Hey, listen, I can sit here and talk about crypto all day, man. This is what I do. So I'm like, if I wasn't doing this right now, I'd be heads down in a contract building something. So it's probably good to get out of my head for a while.
Yeah. Maybe you got to go get on the lake, huh?
Yeah. Don't worry. I'll leave my hardware wall. Oh, wait, I lost that. I had that with me on the boat.
At the bottom of the lake. Yeah. All right, guys. It was fun, man. Good stream.
Yeah, let's do it again. I'm sorry I'm such a derelict, man. It took me a little while to get back to you after you mentioned this about a month or so ago, and then everything's been crazy. So, but yeah, Zen, it's good to talk to you again. We're gonna win really hard. So, I mean, there's abundance mentality for me. So
yes, absolutely.
Yeah, I appreciate you just taking the time and talking with us, Chrispyman. So thank you so much. And Banana, thanks for putting the effort in to set this up. I really love the conversation, and I appreciate
banana. Hey, dude, not that I'm suggesting people should pay for this, but we could have some conversations, man. There's a lot, and the thing is like 90% of the people who might watch this, they're not interested. I am very interested in knowing about how these systems actually react back and forth. I'm studying it every day, and I'm like, You know, why did that happen without look? You know what I mean? So yeah. Anyways, but I think the devil's in the detail for the long term, for sure.
Yeah. All right, guys. Well, thanks much. And
Gentlemen.
the audience did well. Thanks for all the chat in the chat box. That was fun.
It was good.
Yep.
Yeah. See you guys.
See ya.
All right.
Thanks, Crispy.